Eugene, I think investors sometimes have a hard time, or even people that watch the market. It's scary to be in a market that can go down. Does the dollar per dollar risk of going down, does that equate to the dollar per dollar risk of not being in a market that's up 70%? I mean, if they're two sides of the same coin, aren't they? So this should be something all investors consider, opportunity loss. And you may not get it back in a stock market if you miss 70%.
Right, but it's hard to do, Joe. I think you're absolutely correct. Investors are much more afraid of missing the upside, even though many investors will say their biggest risk and fear is of losing their portfolio investment. Not many investors invest that way. They really are annoyed that they missed the big increases in stocks like Zoom or even NVIDIA. And it's very difficult to kind of stick to a discipline and invest in securities that are low price valuations that haven't gone anywhere, even though historically that's where your biggest returns are going to come from over time.
Isn't it possible, though, that maximum FOMO is when all the good news is sort of happening? Like right now, you point out all the things that are good. You know, we finally got the vaccine, the Electoral College finally affirming Biden as president-elect. All these things have already happened, and this is when you feel maximum, oh my God, if I'm not in, I've missed all these things. But to act now, the obvious question is, am I too late?
Yeah, no, investors are very optimistic, and you're absolutely right. We wonder where the black swan is going to come from. No one rings a bell and says what's going to really cause the market to go down when you're in a raging bull market like we are now. And if you look around, everyone's talking about the fact that the vaccine is here. We're going to be completely vaccinated by the end of June, and we're off to the races, even though we're at a record on the Russell 2000. We're 40% up on the NASDAQ. And what we're doing here at Profit, I'm looking around and saying, OK, what happens if we don't get stimulus? It looks like we will, but if we don't, we've been talking about this for 3 months. What really happens to all of the homeowners or landlords that haven't been receiving rent if we don't get a package that allows some help there, right? So what we're doing is we're looking at companies like, say, Medtronic or like Intel or even Goldman Sachs, not companies that a lot of people are really excited to be in, especially Intel, right? You have a company where you have a 10 PE, you're paid 1.6 dividend yield to wait. It's still the largest chip company out there. It was 30% free cash flow margins, 25% on the balance sheet. Yet no one wants to own it because they're looking and saying they delayed 7-nanometer chip, and they're trading like it's going to go out of business. We see a margin of safety in companies like that, and we think that you're going to be well rewarded, even though you have to be careful here in the short term, because with the wash sale rules, you're probably going to see some people selling the stock, lock in the loss. But I think in 2021, you're going to do very well in names like that. And you have to kind of try to avoid that FOMO process of saying, wow, I wish I had invested in Zoom. Wow, I wish I had invested in Wish even, right? Well, guess what? You can participate in Wish by investing in Goldman Sachs because they're one of the lead underwriters. And I think they're going to surprise the upside because they're doing a well of a job investment banking through all the IPOs.
Yeah.
Shepard Smith here. Thanks for watching CNBC on YouTube.